Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, Mark Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, as well as Andreas Zagos, Advisor to IPR Strategies. They join us to discuss data considerations when constructing an index. Gentlemen, it's great to have you with us. Welcome to Trade Talks. And Andreas, I'd like to kick this off with you. Which type of data does IPR Strategies offer?
Yeah, thank you, Jill. Thank you for having me on Traders Talks. So the data that the IPR Strategies is producing is based on pattern value. So there are many indicators which are applied over live patterns, and they generate a certain pattern value for every equity. And those equities are then selected in order to build different products like index products. It's important to know that the data is a pure quantitative. There is no human interaction. This means it can be used directly by quantitative asset management departments. And it's as well forward-looking. Yeah, this means that the pattern value is looking into a potential future of a company's behavior and about the potential new products for the future. So we always say it's a forward-looking indicator, which is as well important in order to generate good products for the future.
So, Mark, what specific advantages can be derived from incorporating non-traditional data sources when constructing an index?
Yeah, Jill. So there's a lot of advantages to looking outside of sort of traditional financial fundamental data and technical market data. For one thing, obviously, alternative data just expands your universe beyond what you would consider to be the inputs for sort of traditional investment factors, right? The things that really drive investment returns in the short and the long term, things that are derived from financials or from market technicals, right? So things like valuation, growth, momentum, quality, volatility, all those things, a lot of great investment strategies are built around, and there's a ton of empirical research around how to use factors like that. But alternative data, like a patent valuation data set, really can play a role in terms of widening the universe of possibilities and enriching some of those strategies, right? So here at Nasdaq, we have a pretty long history in terms of dealing with alternative data. We acquired a platform called Quandl many years ago. It's now known as Nasdaq Data Link. And in fact, this patent valuation data set lives on Nasdaq Data Link. It's how the index group sort of first started looking at it, started testing it out. And, we had a very specific use case in mind when we started sort of back testing this data. We had a client in Invesco that had this great product set called the Innovation Suite, anchored by the Nasdaq 100 with a mid-cap extension to it. And we wanted to create something that could expand that into small cap. So
Ryan, could you elaborate on some of the unique considerations associated with relying on alternative data for index generation?
Yeah, absolutely. And I, as Mark was saying, right, we viewed sort of the innovator completion cap index from Nasdaq as a way to expand our innovation suite, effectively moving down cap past our mid cap offering QQQJ and introducing a small cap growth strategy into the market that's backed by IPR's work in patent valuations. And I think some interesting considerations would be differentiation in terms of methodology. Right, as you look at the Nasdaq 100, it's very clearly the 100 largest ex-financial companies listed on the Nasdaq exchange. Right, when you go down to QQQJ or the Nasdaq Next Generation Index, that's the next 100 down. As you keep going down the hundreds, right, you want to create or identify a basket that has similar characteristics, right? One that is innovative in nature. And in looking at just market cap, right, you see a lot of turnover, and in general, sectors that are maybe viewed as less innovative, things like materials or things like energy, even some segments of consumer discretionary, wind up in that index. But kind of relying on patent value per company relative to their their market cap, I think introduces sort of this new notion of looking at intangibles, right? It effectively uncovers companies that may have underappreciated patent portfolios. And what we see is very similar to the experience that investors will undergo in QQQJ or QQQM or QQQ, right, tracking the Nasdaq Next Gen and Nasdaq 100 indices, where you have a basket of companies that are in general spending more on research and development than peers, and are very active in the patent space. So it was a way to kind of incorporate some of this alternative data set to give a natural extension to the types of companies that we already offer in a large and mid-cap format, again, giving investors the opportunity to invest in a basket of smaller cap innovative Nasdaq listed companies.
All right, Ryan, Andreas, Mark, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.